So this is the credit. Now, did we get anything for it?
No.
No, so we don't have to worry about cash or anything. But what else do we have to get? If we get rid of the equipment, what else do we have to get rid of?
We have to get rid of the accumulated depreciation.
Accumulated depreciation. Now, is that going to be a debit or a credit to get rid of that?
A debit.
A debit, because it's normally a credit to make it go up. So to make it go down, we just get rid of accumulated depreciation.
Right.
That's going to be the 65,500 as well, right? Because that's what we calculated it out to be.
Mm-hmm. That makes sense.
Okay, this one's really easy.
Yeah.
Let's do another one.
Okay.
That won't be this easy. I'm sure the next one will have a gain or a loss or something on it, but then I'll have you do the next one after that. Okay. Okay, let's see. Read the next one off.
Okay.
We'll go through it, and then, so give me some of the details.
The date is January 30th.
Okay, so we're on 1-30.
Yeah.
Okay.
It says sold a computer that was purchased on January 1st of 2011.
Bought on January 1st, 2011. Okay.
Mm-hmm. The computer cost $33,600
Okay.
and had a useful life of 5 years with no salvage value.
Wow, no salvage value again, huh? Okay.
And the computer was sold then for $13,440.
How much?
13,440.
Okay. Anything else?
Nope.
Okay. All right, so what is January 30th or 31st?
June 30th.
Oh, June 30th, excuse me. 6-30. Okay. Let's okay, step one.
Step one, we gotta find the depreciation expense. It's gonna
Okay.
be the $33,600
So cost 33,600 minus
zero
0. We don't have a salvage value.
divided by 5.
Divided by 5.
Let's see what that is. $6,720.
6,720. Okay. Now, step two.
Step two is to find the accumulated depreciation.
Okay. So tell me, how am I going to do that on this one? Our dates don't match up like they did last time. We bought it on January 1st of 2011. Now we sold it June 30th of 2014.
Right. So that's going to be
So let me
so first we're going to have it for 2011, 12, and 13.
So we have it for 2011, 2012, and 2013.
Mm-hmm.
Okay, how much in this year? How much was it?
6,720.
Okay.
Same thing for all three of them.
Okay. All right.
And then,
2014.
knowing that it's only half of a year, would you do 6,720 times 0.5?
Yeah. Or if on this time, well, we have to make sure it's exactly 6 months, right? So we always just count it out just to make sure.
Right.
Even though it sounds silly, people are looking at us like, "What are you doing in the testing center?" You use your fingers because it's easy,
That's what
right?
other parents are told to do. Like, just pull out your fingers. Don't be scared.
So we had it for January, February, March, April, May, June. Perfect. So it's been exactly 6 months. What if it had been 5 months?
And it'd be
How would we do it? 'Cause this
5
time,
over 12.
yeah. So I just always put it over 12, even though right, it's
Right.
half, right, on this one. So that equals what?
Let's see. It's 3,360.
Okay. So what's our total accumulated depreciation then?
It's 23,520.
23,520,
Yeah.
you said? Okay, so you added all these up and you added it to this, right?
Hold on. Yeah, that's right.
Okay, so that times 3.
Yeah.
Okay. Cool. So there's our accumulated depreciation right there.
Yep.
Okay, what's the next step?
Find the book value.
Book value. Okay, what is our book value? How do we do that?
So that's going to be the original cost of 33,600
Okay.
minus that 23,520
Okay, what does that equal?
equals 10,080.
That? Okay. Cool. And then our last step before we can journalize it is
To figure out if there's a gain or a loss.
so gain or loss. Okay. So we take the proceeds or the sale amount. How much was that?
Sale amount was that 13,440
So 13,440. Okay.
minus the book value of 10,080. $3,360.
3,360. Okay.
Yeah.
So is this a gain or a loss?
It's a gain
A gain. How do you know it's a gain?
because it's a positive number.
Okay. That's
That's
true.
That's the only reason.
Well, only because the way that I've set it up makes it so if it's positive, it's a gain, and if it's negative. Okay. Sometimes in your book, they'll switch these two. Well, they used to. I don't know if the new book does or not. They had these two numbers switch. They took book value minus proceeds, and so a negative number would be a gain.
Kind of confused.
Okay. But in this case, it is a gain because the amount we sold it for was more than the amount
Okay.
in our books.
Depreciation.
Okay.
Did they see book value?
All right, now we can journalize it. So there's gonna always, the way I do journal entries is I always think about what's the most obvious thing first, and then I just fill in everything else.
Yeah.
Okay?
I guess that's what I need to figure out, a little trick on those.
Okay? So what's the most obvious thing when we sell this? What's the most obvious thing that's happening?
That we're losing the.
This, I don't even remember what this was. A computer? Truck?
Selling a computer.
Okay, so we're losing the computer, right?
Right.
Okay? So what should we do to get rid of the computer?
Well, we're gonna credit the. What does a computer, I guess, consist of? Because there's like obviously you have equipment. Would that just be a plant asset? The
Yeah,
computer?
it's a plant asset. Basically, in Wiley, they're going to have you either do land, buildings, or equipment. So is it land? No. Is it a building? No. We're going to say equipment.
Equipment. Okay.